right. Well, hello everyone. My name is Evan Balsis. I am pleased to introduce our webinar we're hosting about Florida investing, cash flow, and appreciation. I got two rockstar agents out in our Florida office that are going to be speaking with us briefly. I'll introduce them here shortly. But without further ado, let's get started. So for those that are new with us, or maybe just not familiar with Marshall Reddick and what we do, we're pretty unique in our approach. We have three divisions within our company. We operate as a brokerage, so we help clients buy and sell, whether that's a primary or an investment property. Majority of our clients are investors, and they really have no interest in doing the day-to-day management of that. So we offer property management in each of our locations. And lastly, we do private financing. So it's pretty unique in that subcategory. We have borrowers that come to us wanting capital, whether they're buying a rental property or doing a fix and flip loan or maybe a new construction. And then lastly, on the coin side of that, is we actually have clients that are willing to put up the money and make a yield on their money. So that makes us pretty unique. We're kind of like a one-stop shop here at Marshall Reddick, and we really kind of just cater towards whatever your goals are and what you're looking to achieve. Whether you're, maybe a hands-on investor and you want to just buy rental properties, or maybe you're looking for, a passive income way and kind of just collect interest payments. So whatever you're looking to do, we kind of cater towards all. So more about me. Again, my name is Evan. I'm an advisor here with Marshall Reddick Real Estate. I'm also a licensed California agent, and I've helped assist over 100 million plus in transactions within the last 5 years. I own multiple investment properties out of state as well as in state here in California. And I'm kind of a nerd. I kind of love to geek out on doing like real estate financial modeling and running different Excel spreadsheets and looking at cap rates and return on investment. So I feel like if you are new in your journey and are looking to find a property that's meeting a certain investment criteria, I can assure you you're going to be in great hands. And more or less, I'm going to introduce you to our agents in Florida here. Oh, never mind. Let me backtrack. Our markets that we cover 16 major metropolitan markets. The green box, these are the markets where we actually have a footprint in with an office. So as you see, we're in Cape Coral, Florida. That's the purpose of the webinar, but we have a couple offices in California. I'm based out of our Newport Beach office, so we have an LA office as well. And then we have a Tennessee. We're in Nashville and Clarksville, and we're also in Texas. We're in the San Antonio, Austin, as well as New Braunfels as well. So again, we cover pretty much a majority of the market share across the nation. But for the purpose of the webinar, we're really just going to cater in towards the Fort Myers and Cape Coral, Florida. And I'm sure you guys are probably wondering, where do we come up with where to invest and educate clients to invest too, right? So we kind of cover and do all the major homework for you. So one of the things that we cover is, job market. What's the job market there? What are the big job factors that are providing and stimulating that economy in that specific city or county, right? And then we kind of just go down the list of vacancy factor. What is the vacancy rate? Is it 3% or an 8% or maybe even worse, or 12%, right? So we kind of do a lot of the legwork and majority homework on the front end. So we have data packets that we could send you in each marketplace, so that you can really kind of hone in on the details and see what the economic diversity is. Is it a landlord-friendly state? And I'll kind of dive in a little bit to that further with our property management. division that I'll chat later in the webinar. But we go through just a whole variety of different factors that really is it's a determining factor where to put your money and watch it grow, right? Because you don't want to stick it into a state or even a city that is not progressing, right? You want your money to work for you. You want a good stable tenants that are paying and watching the rental growth rate progress each year. So all those variety factors, we kind of do all the homework for you guys. All right, so now let me introduce you to our rockstar agents. To the left, I got Jerry Robinson, and to the right, I got Greg Ring. Gentlemen, take it away.
All right, thank you, Evan. Speaking now, I'm Greg Ring. I've been a realtor and advisor here in Southwest Florida into my 4th year now. I am a licensed realtor, local area expert, as well as a nature enthusiast. Jerry will be on in just a short bit, and he will speak about himself then, but I will take a moment now to just highlight some facts for you. Jerry Robinson is also a licensed realtor here in Florida. He's also a licensed real estate instructor, and as well as specializing in investment properties for our clients, he also has specialized in multifamily and commercial real estate. To take a wide angle look at Florida, Lee County in Florida actually houses 3 or more real estate markets, 3 of them that we like to focus our efforts in. We have Fort Myers, Cape Coral, and Lehigh Acres. Currently, Florida's population is sitting close to 22 million people. And an important note on this slide here is that 23,000 residents have moved to Southwest Florida in, well, this says 1 year. I would like to say that, yes, it was over the past year. And to focus in a little more on the populations and statistics regarding the areas that we like to focus in, Lehigh Acres, we're seeing a population nearly 124,000. Cape Coral, it really wants to top that 200,000 mark. And also in Fort Myers, we're over 340,000 people living in the area. That's not counting Estero, Bonita Springs, or Sanibel. So it's important to note also, with these populations, there's also an abundance of, well, not an abundance, there's 33% of the homes here in our market are actually rental properties. And as a realtor and leasing agent here in the market, I can promise you that that still feels like it's not enough. Some of the highlights for the Southwest Florida market are, of course, when you think Florida, you think sun and you think beaches, and we have plenty of those. Bonita Beach, Fort Myers Beach, Naples Pier, they're all just short drives away. Cape Coral itself also offers a beach as well as numerous marinas and recreation areas. So some of the reasons people are investing in the Southwest Florida, obviously, like I mentioned, the relaxing lifestyle, the weather. If you're a boater, a fisher, paddleboarder, kayaker, this is the state for you. Outdoor recreation is, probably a #1 on the majority of folks moving to the area or looking to move to the area. Another highlight is going to be low taxes. I'm sure we'll speak a little bit more on this further down in the slides, but Florida has no state income tax, so that's one benefit for many of the folks relocating to Southwest Florida, whether it be to retire or look up for employment here. Southwest Florida is also, it's a landlord-friendly state, and that is good for our clients. While we don't like to see evictions, we can get them resolved fairly quickly in this state. It's noted 30 days here. Sometimes we're able to get them completed faster than that.
Usually within 18 to 45 days, anywhere between 18 to 45 days.
Yeah, yeah. So our real estate market here is super strong, and we have great job diversity. The economy and the housing market here in Southwest Florida, it's just booming pretty much. Population and jobs are growing almost, hand in hand. Lee County itself is a fairly business-friendly area, and right now there is definitely more demand than supply in the real estate market. Lee County has more than 1.3 million annual visitors who are visiting the area and spending over $1 billion in our local businesses. What does the Southwest Florida job market look like? Cape Coral, located obviously in Southwest Florida, was recently ranked by Forbes magazine as the third best place for jobs in the U.S. Our GDP in Southwest Florida is nearly $34.5 billion and has grown by about 56% over the last 10 years. The unemployment rate in the region here, this is saying about 2.9%, which is fairly low. There's still a big demand for workers actually in a lot of the fields here. So there's plenty of room for growth, and that's exciting. The median household income for the area in Southwest Florida is currently ranked at $61,000 and nearly $600, and that's a 6% increase over the past year. Some of the major employers that we have here in Southwest Florida, we have Lee Health. They're the major hospitals located in Fort Myers, Lehigh Acres, and Cape Coral. Publix is one of the grocery stores, and
just privately owned grocery store.
Publix actually is the largest employee-owned grocery store. We also have plenty of colleges. That's great for employment opportunities for professors and as well as the students in the area. And with students, we also have people looking for homes to go through their classes, as well as, ending up living here in the Cape upon graduation. Hertz corporate headquarters is also located right nearby in Estero. This graphic here is a great example of I like to call it our commerce corridor, as it's aptly titled on the slide. Northeast Pine Island Road and Del Prado Boulevard are kind of some of the major throughways, as well as Santa Barbara and Chiquita Boulevard. Along this throughway, it's just growing and expanding nearly every day. We've just opened it's an incredibly large grocery chain or grocery store that I've never seen lines for a grocery store. There was like an hour wait of traffic just to get into this grocery store. But anyways, the corridor itself is up and coming. It's just growing more and more every day. And with that becomes more opportunities for jobs. And with more jobs, we need more housing. Cape Coral, The metro area of Cape Coral, it ranks number 9 with Forbes as 2018 America's fastest growing cities, and it's certainly keeping up with that. Again, to speak on the population, we're over 194,000, and very, very soon we'll be breaking the 200,000 mark. And if you don't mind, I will be introducing Jerry Robinson to take over from here.
Thanks, Greg.
Hey everybody, glad you guys can make it here. So Greg has kind of explained some of the macro look of our market here in Southwest Florida. We do have a pretty strong connection with Lee County, which is going to be your Cape Coral, Fort Myers, and Lehigh. We're also starting to see some really big growth hit Punta Gorda, Port Charlotte, and the surrounding counties around us. So a little bit about the Southwest Florida home prices. This is always a big one, especially for an investor, right? We want to make sure that the properties make sense. So the typical home value in Florida, or in Lee County, excuse me, is about $350,000 according to Zillow, which is going to compile everything that comes off the MLS, as well as for sale by owners, things like that usually we'd not see as a metric. This past year has been absolutely massive for Lee County homes, and a big driving force, I think, to that has been a lot of people that probably had the idea of moving to Florida at some point. The pandemic tended to push everything up, and so we've seen a growth of about 36% in the appreciation of homes over the past year. A lot of people from your larger metropolitan areas or some states with a different political climate have brought their money here. In doing so, we know that states, California and other places like that, were able to cash out at kind of the top of the market, come here and buy homes cash, either through a 1031 or through some other program. But that helped to push up the prices a little bit on properties. Sale to list price ratio at this point, pretty much what you market a property for is what it's going to sell for. There is a huge grab going on for this area in Florida. Another market is the Lehigh area, the Lehigh acres, and I'll touch a little bit on kind of the differences between the states or the cities here in a minute. But Lehigh in itself has appreciated about 94% over the last 10 years, and it's continuing to grow. So that's a really nice thing, is we're starting to see a lot of builders that are in the area push their market out that way to help keep prices down a little bit. Land's a little bit cheaper out there, and the rents are not horribly different when it comes to whether you're Cape Coral right next to the water or you're a little bit more inland. Also, Lehigh Acres is mostly going to be in an ex-flood zone. Great to know from the standpoint of insurance. Flood insurance has recently gone through a restructure through FEMA. So these are all things that we kind of take into consideration as we advise our investors. Lehigh Acres as a whole right now has been 10% nationally in appreciation. And what we're seeing is a lot of those that are in Cape Coral that it's gotten a bit more expensive for, have moved their way inland. Land is just cheaper there. Lots in Cape Coral right now are typically $30,000 to $60,000. You can buy lots out there for close to $5,000 to $7,000, and able to build on standard lots out there. So using the ZHVI, or the Zillow Home Value Index, Cape Coral currently is sitting at about a $358,000 as the average price of homes sold. This is about 40% over the past year. Fort Myers sees $317,000, which is about 34%. Lehigh Acres is around $261,000 average home sale price, which is still a 35% increase over the year prior. So in this area, we have seen a boom, especially over the last couple of years, in new construction properties. We see those both in large multifamilies that are being built, as well as HOA subdivisions and non-HOA homes. So the tops on this list, which are Lennar, DR Horton, and Pulte, they primarily build communities or HOA subdivisions. Brooks and Front does a lot of the large multifamily building that's in the area, custom builds, and we're starting to see more of them come in because, quite honestly, the housing side of it has become very, very difficult. People are having houses built. It takes time to do that. They needed a place to put all the people that were coming here. That's what these larger multifamilies have serviced, and we're seeing a ton of them go up. There's currently 3 that are being built in Cape Coral, North Fort Myers area, to the tune, excuse me, to the tune of about 1,500 units we'll see enter our market here, with rental rates very similar to what the houses are. And what that means is that not everyone wants to live in a multifamily community, or not necessarily an HOA, but a multifamily apartment type setup. Single family homes are still producing very, very well. JHS Builders is, it's Christopher Allen is the builder that's here. I've personally sold a lot of these properties to investors. We actually just closed on one today. Last month I had 8 that I closed with Christopher Allen. And so just to kind of input on them, they typically build in non-HOA situations or land. Their build time is very quick in comparison to a lot of other builders that are out there. They're about 4 to 6 months from permit to CO or certificate of occupancy. These properties also, when I was originally quoting these to my investors back in September, they were quoted rental rates right around the 2,000 mark. And Greg, as well as some of our leasing agents that are here in the office, have rented the last sets that have gone out between $2,350 and $2,475, which is, you know, $300 more than what we were originally thinking they would go for. And there's still room to grow. The thing is we once we put them up on the market as a rental, we have 20 applications that walk in the door right behind it. So these are some of the builders. There's a few others that we actually work with in the area, but these are some of the ones that have put up the most properties in our area. Excuse me. All right, so to take a little bit of an inside look into our market here, a little bit more of the micro that you would see here. So on average, we got about 35% of the homes that are out there are currently being used as rentals. This can be annual, vacation rentals, a couple of different ways on that. Our average population growth yearly has been about 5% each year from 2000 to about 2020. Last year, we saw a really, really high increase over that, which is what has allowed us to keep our vacancy rates as low as they are. People, when they're coming here, they need a place to stay. So vacancy rate of about 1.6 in single family homes. It's about 3% in multifamily. You have a little bit more turnover when it comes to the larger multifamily areas. And that's common. They move to different areas or closer to jobs, things like that. Rental income group. So those that are renting in our area, their incomes have gone, typically it's anywhere from 33 up to 100,000. And quite honestly, that number is probably a bit higher as it stands now, as a lot of people during the pandemic have moved to living in or working remotely. So rental rates, average at the time was about $1,250 to $2,000. That's gone up since this slide has been created. So yeah, the average household size here in Lee County is four occupants. Median age is currently about 48 years old. In 2000, the median age, and this was largely driven by Cape Coral, was about 61 years old. 60 to 61, it was a number right in between there. What we've seen is that those that came here to retire are passing away, are moving to be with family, things like that. And family is inheriting the properties. Their age is a bit lower. The fastest growing age range in our area is 25 to 34 years old. And the fastest declining is 65 and older. We do see, obviously the pandemic's been a little bit different over the past year, but we do see an average rental increase of about 3.7% year over year over year. It's been probably closer to 25, 26% over the last year and a half. But that's primarily, like I said, it's been driven by those that are coming into the market. Most popular property that was built for a very, very long time here is your standard 3-bedroom, 2-bath. This is true in single family or multifamily. Although we are starting to see a bigger push towards 4-bedroom properties and even larger than that. Luxury rentals are another one that are coming in pretty strong right now. And the reason for the additional bedroom isn't necessarily for a larger family size, it's because people are working at home and they like to have a home office in their property. The biggest upgrades that we typically see, or that we see that renters talk about, they absolutely have to have in our market. Garages is kind of a given. Some of the older properties here did not come with them. They still rent and they still sell, but garages are definitely a big one. To have a fenced-in backyard, a little bit of privacy is absolutely massive. It does garner a higher rental rate just because there's a fence there. Pools are nice. A lot of people want them until they have to maintain them. So you've got pools on that side, and then obviously pet friendly, because everybody likes to walk their dog on the beach, or cats I've seen walking on the beach on a leash, which is weird to me. But you do see that kind of stuff here. So pet friendly is always a big thing. We tend to try to identify properties with the idea that we are going to have renters that are going to want pets. And so we try to stay away from carpet. We try to, or do an upgrade to tile or a luxury plank vinyl, something like that, so that they can cater that without having to replace carpet all the time. So Southwest Florida as a whole, we have been ranked as one of the best US cities to start a business. And that's been a lot of your small businesses. I think it's been really nice for people to come. They can start a landscaping business. They can start a handyman or plumbing or whatever the case may be, and really take off. Anybody who starts anything that's going to be in construction here typically will do very, very well. I know that Greg spoke a bit about the weather here. Weather's typically great. You know, winter just pretty much came and gone for us. I think it was on a Tuesday this year. Most of the time we are 80-ish and above. But we did have a cold day last week. Economic opportunities. So looking at what's out there, whether it's those that are going back to school, whether it's starting a business, whether it's working from home, whatever the case may be, the opportunities are endless here. Low taxes in comparison to other states that are out there. One of the biggest things that I hear personally from a lot of investors that I work with in places like Chicago or New York or California is their tax rates are out of control. And when I tell them ours and I go, wow, that seems like a little bit of a high number, they're like, that's a quarter of what I was paying somewhere else. So that's definitely a nice way to kind of keep cash flow coming in. Entertainment options, it's really the sky's the limit. I know that Greg had spoken a little bit about the beaches, and if you're in Florida, there's beaches on every side of you. But inland Florida also has a lot of hiking trails. We're mostly flat, but they do have a lot of trails through the woods and through that side as well. We, being where we are, and one of the reasons why this location is so nice for people to come to, is that we're literally a hop, skip, and jump from all of the major metropolitan areas. So areas such as Orlando or Tampa, Miami, all of these big big cities are within a 2-hour drive from us. So if we want to go to Disney or Busch Gardens or whatever the case may be, they are pretty close. It's easy to spend a weekend in a staycation at one of those locations. As mentioned earlier, we do not have a state personal income tax. There is no corporate franchise tax on capital stocks, no state level property tax assessed. There's no property tax on business inventory, and there's no sales tax on manufacturing machinery and equipment. A little bit different. You won't see a lot of that in the residential side, but it's good to know. So unemployment rate, this is actually a little bit higher than it was, but 2.9. We're usually, we've been sitting at like the 1.5%. We've done really, really well when it comes to that side. We're the third fastest area for job growth in the nation. Our biggest businesses, as we've kind of been talking through this, is going to be medical, right? A lot of people come here to retire, so medical is always big in Florida. Construction, whether it be commercial, residential, things like that. Teaching is actually a really big one. There's 109 schools just in Lee County for elementary, middle, high school, charter schools, private schools, and then the colleges as well. Median income varies a little bit from the other numbers. So we're looking at 57,000. It's actually a little bit higher. It's about 61 right now. In our area, and one of the cool things about Cape Coral, I say Cape Coral, but Southwest Florida, is that we have a total of 47 miles of beaches and over 400 miles of canals. Cape Coral was originally built in order to be a large retirement area, and it's shifted from that. But it was originally designed for that, and the idea was that everybody was going to have waterfront properties. So they dredged all of these canals in the area and then built out the lots around them. We're third in the nation for small business startup. I mentioned that earlier. We've already mentioned the state income tax and lower property taxes. Our location is obviously great, being that we're close enough to the large metropolitan areas to get there in a hurry, but we don't have to deal with all the traffic with them, and that's a big thing for us here. And so all of these are reasons why people have flocked to this area and why they are still flocking to this area. They were coming before the pandemic. I think that again kind of pushed everybody down our way. Speaking individually about the cities here, Cape Coral we're an average property area here. We have everything from luxury, A-class and B-class. We do have some Gulffront property that is here. Our appreciation rate has been and I always kind of make the difference between pre and post-pandemic, but pre-pandemic, we were typically 3 to 5% annually. It has been a little bit higher in North Cape Coral, primarily because North Cape Coral is currently going through a massive expansion. They're doing the utility assessments out there, the Pine Island corridor being built. All of these things kind of help to push that way. The appreciation has always been great here. So those that buy in Cape Coral are typically going to be your long-term buy and hold investors. The median income for renters is higher through the Cape Coral area. Rental increases typically sit between 3 to 5%. And it's a different type of clientele in Cape Coral than you are going to see in the other ones. Because of that, we tend to see a lower maintenance cost on our properties in Cape Coral. And while we can control and understand the property taxes and the insurance and all these other things are kind of fixed for us, maintenance can go a long way in keeping that positive cash flow or dropping it lower. But it's a great place for long-term investors. A great place if you need to park money for a 1031 exchange or something like that. In Fort Myers, Fort Myers typically runs a little bit lower, so we're A, B, and C class that you'll see through there. And it is kind of a mix in between the areas in Southwest Florida, right? You can get the high-end properties or low-end properties, depending on what your investment strategy is. If you're a cash flow investor, there's properties in Fort Myers that meet you. If you're a long-term buy and hold, depending on the returns, the lower cash flow, but the higher appreciation, you'll find all of that through Fort Myers. It's very hyper localized. So close to downtown is going to be more your cash flow properties, right? As you move further south, the price of properties, the appreciation, and the rental rates all climb as you move that way towards the Estero, Bonita Springs, and Naples market. It has the largest range of income for renters. So you can see renters anything from Section 8 properties all the way up to those. I was looking recently at some luxury properties that are over there that rented in the 4,000 to 6,000 range. Those are going to be your more high-end homes, obviously. We do see the widest range for rental increases annually through that as well. Because there's a ripple effect as you start raising prices in one area, it ripples out to everything that's going to be there. The investment opportunities, there's a lot more in Fort Myers when it comes to that. So again, it depends more on what type of investor you are. If you're a hybrid investor, someone who does appreciation properties and cash flow properties, Fort Myers is a great place for you. Lehigh Acres. So Lehigh Acres is a little bit lower on the end when it comes to appreciation, but those that keep a really, really good eye on maintenance control with proactive maintenance programs, things like maintaining ACs and well systems and septic and things like that, can actually see higher annual cash flow. The appreciation is just a bit slower out there than it is in other markets. It has the lowest income range for renters in our area, but they've gone up just like everyone else has. And you'll see the value or the appreciation in those properties grow as Fort Myers and Cape Coral becomes more saturated. There's still a ton of building in those two areas, but eventually, right, you'll run out of land, right? Or land will become too expensive. And that's kind of what's happening right now is the land values have gone up. So a lot of builders are moving to Lehigh Acres to keep their end moving. And so actually, if you go to our website, if you want a detailed market data packet on our area that will kind of explain everything that we've gone over so far, as well as more information for the area, you can go to marshallreddick.com / Cape Coral, and you can pull that from there. All right, so we talked a little bit about property classes when I was saying that we had luxury, A, B, C, and D class properties. These are based on a couple of metrics that we would look at. The types of tenancy that we'll see, right? They have to be able to afford the property, the values of the property, and the types of returns that you can see. If you look on the right side, it'll kind of tell you what appreciation kind of looked like for us over the years. We, just like everywhere else in the nation, kind of have this little blip between 2006 and 2009. And then from 2010, it has been just a steady climb. We don't have 2021's numbers up there, but I can't wait to see that because I know it's going to be huge. But so, yeah, we divide our properties or the types that we sell based on those parameters. We look at the type of tenants that we're going to have and the values of the property and to what rents we're actually going to be able to see on those properties. All right, so this is my favorite part. This is where we get to talk about some of the properties that have hit our market or that are hitting our market, I should say. And so you can kind of see an in-depth look of the type of properties that you would see if you were investing in our market. So the first one we come to is it's a property in Lehigh Acres, Florida. if we, and I'm just going to move right over to the other side here. I need to slide this. Can I? Yes. Perfect. Okay. So list price on this single family home right here. This one is a 4-bedroom, 2-bath with 1,500 square feet of living space. Energy efficient appliances. Obviously ACs are going to be in every home that we have here. And then you've got tile through the wet areas and mostly the kitchen and the bathrooms. So Shadow Lakes is a community that's in the area. We have a list price of $305. If we're looking at it just as kind of a breakdown, 25% of that to purchase would be about $76,250. We usually will place an initial repair cost into the beginning of it, just because it may be listed through a third-party vendor. There may be some things that we need to negotiate through the sale of the property, but that's a pretty common. That'll like $1,500 will replace ceiling fans, blinds, things like that in a home. And then your closing costs. So it gives you what you would need to purchase a property like this. We have a rental rate of $2,100 on this property. And then it gives you kind of the breakdown of what the monthly expenses would be. This would give you a monthly cash flow after everything is said and done, a fixed income of about $384.52. This doesn't, so 384 is right about where you would be each and every month coming in on this property. The bottom of this changed a little bit, so I got a little caught up there. Still giving you a 15, we base everything that we do off of a 15-year ownership. But at 15 years, you'd see a profit about $223,000 with your return on investment about 17%. All right, duplex that is located in Cape Coral, Florida. It's an older duplex. Currently, the list price on this property is at $539,900, giving you a down payment of $161,000. Initial repair costs of $1,000. This one has gone through a renovation, or it has been renovated, so there should be very little that would need to be done on something like this. Looks like it's currently rented out at about $1,550 a side. These will typically get, the numbers that are in there because of how fast we have grown here are normally going to be undervalued when you look at it from a rental now versus what it will be. We have a gross rent based on the averages in the area of about $3,150. After everything is said and done, we're still looking at an income coming in at about $254, with giving you a 15-year profit of $328, and that gives you about a 12.5% return on your investment. This is going to be one of the newer homes. This was actually a D.R. Horton build, it looks like. It doesn't say, but Shadow Lakes had D.R. Horton was the one who built a lot in there. Nice on this one. It's a 3-bedroom, 2-bath, currently listed at about $270. So you can see there's a bit of a difference between the price and properties in Lehigh versus what we'll see here or in Cape Coral. So we got a list price of $270. Down payment is set there. Your gross rents on a property like this would be $1,850 as it stands right now. This would give you, after everything is said and done, still give you a monthly income of about $347 a month. Profit on a property like this is about $160,000 with a 15-year ROI of $1,386. This is my property. I love this property. So you'll notice at the top it says Port Charlotte. This is actually, that builder is located in Port Charlotte. But they have a claim. They're very, very unique in the way they build. Obviously, you see a difference to the way the roof is set up and everything else. This builder actually came from the other coast about 1.5 years ago and started building properties here. They started in Port Charlotte. They are currently in the process of building a few in Cape Coral, but they will build to suit or build on your lot. So on a property like this right here, It's currently listed at about 3,099. Where they're building, typically no flood insurance is required. We look at the down payment, everything, the investment capital is needed. It's about 89,000. Gross rents on this property, I know it looks a little different, but gross rents on this property are right around 2,300 a month. Absolutely huge. The inside of these properties are all high-end quartz, porcelain tile. They did a really, really good job in building these properties out. So about 2,300 a month is what we'd be looking at. Your expenses each month, you're looking at about 1,770, but that gives you a monthly income of 529. So for what you were looking at on some of the other properties versus here, we have a much higher income that's going to come in on these properties. One of my favorite parts about this is that the way that they are built is very different from any other build. Usually you'll see stick frame or you'll see concrete block. These are actually built out of steel with a concrete and castcrete build within the steel beams. Their hurricane rating is higher than any of the others that are currently out there. The roof is at a slight slope with some holes at the bottom line there. A lot of people that I talked to had concerns going, oh, it's going to flood, and it's not going to flood. The water is able to drain off. But again, you're looking at 529 cash flow out of a property like this. The 15-year profit's about 251,000 with an ROI sitting right at about 18 3/4. So not
I want to hit something real quick. You know, out of the properties that you're showing here, for the other properties, and even this one too, is don't get hung up on, this is obviously year one cash flow, right? Cool. So that gross rent you see there at 2,300, that's what year one's going to look like for rent, right? Now year 2 and 3 and so on, it's going to look a lot different. We're going to do obviously annual rent increases, let's say 3%. So that's going to look a lot different. So, you know, year one, you have a monthly cash flow of 529. Let's say we bump the rent up next year for year 2, and we're getting, let's say 2,400. Well, now you're getting, you know, 629 in monthly income. So these projections here are based off of year 1. So I just wanted to bring that home.
Yeah, no, absolutely. And you're absolutely right. So this is typical, like I said, this is a new, unique kind of build that we're starting to see in our market here that kind of breaks away from the cookie cutter look that we've had here. I've seen a few of these homes actually go up in Cape Coral. They're absolutely gorgeous. And the maintenance upkeep on them is very, very low. They do impact windows. They do all of these other things that not every builder is doing right now. And at the price point that they're willing to build them out at, they vary. The builder, I've actually got a relationship with the builder, and they'll build anywhere from 3-bedroom homes up to 7-bedroom homes. They kind of the sky's the limit with what you want to do with these things, and their price point is not bad at all. If you're interested in having any 7-bedroom properties as a rental property, I mean, those things will make a killing. Okay, so that is actually about it for Greg and I. I'm going to go ahead and hand the reins back over to Evan and let him kind of finish out the rest of this.
Yeah. All right, thank you. So, you know, I touched briefly a little bit about our property management, and you know, we have a very simple fee structure in the business. You know, here at Marshall Reddick, a lot of our staff, including myself, we all own investment properties. So we've kind of tailored our own a little approach where, you know, years prior, we invested out of state, and I could speak with a couple staff members here where, you know, we didn't have a property management team in there. So a lot of these other property managers will charge, you know, just ridiculous fees that essentially just kind of eat away at your profit. So we really wanted to have a hassle-free, you know, no hidden costs, and just a simple fee structure in the business. So depending on what you're looking to buy, based on a single family or condo or townhouse, we have an 8% monthly management fee. And then for a 2 to 4 unit building, that's 8% as well. And then anything over that, it starts to have just a trickle down effect on the monthly percentages. And you know, just to kind of hone in a little bit more on the fees here, we do charge just a lease renewal fee of $150. And what that means there is that if the tenant decides to renew and stay an extra year, we just charge a $150 fee. If the tenant is late, we do charge a late fee for that month, and we'll split that late fee with you. There is a leasing fee we charge, and that's simply just to pay the leasing agent that procures the tenant. So I'm sure a lot of you are asking, how do we procure the tenant, and what qualifications do we do in doing so? And basically what we do is we have 5 different background checks that we do just to make sure that this tenant is a quality tenant for you, right? So we do an income verification. We want to make sure that they are at least making 2.5 times a monthly rent. And then we do a background check, credit scores. We'll actually call, if they have a record of leasing properties, we'll call their previous landlord, and we'll just want to make sure that we get a reference from the previous landlord, and asking questions such as, like, how did they leave the property? Were they good tenants? Did they pay on time? So we do all that legwork for you just to make sure that we get a quality tenant that is ultimately going to be just an easy plug and play, where you can have no hassle in trying to evict tenants. So I think out of the pandemic, and Greg, you may, and Jerry, you guys may be able to speak on this too. I think we've only had like maybe 2 or 3 evictions that took place, and I think that was only because we had owners that bought properties with tenants in place, and they were just not quality tenants that we wanted the owner to take on. So
No, you're absolutely right, Evan. A lot of the evictions that we have had to take on as a company here in Florida have been specifically because of that. We've taken on a property that we were able to get for a good deal because they had a tenant that was non-paying or that was a hassle, and were not able to go through the process, or didn't know enough, or were self-managing, whatever the case may be. The property would sell, we would take it over, we would have to go through the process at that point to remove them and actually have tenants that we were able to qualify. And we even try to, when it comes down to it, get a background check on property or on tenants after when we're going to issue a renewal to them, because what we've been told and what maybe are 2 different things. And we've learned that. Sometimes initially we learned it the hard way, but that's kind of our MO as it stands right now, and where a lot of those have come from.
absolutely. And you guys can rest assured too, is that, you know, we're not here just to sell you property and never talk to you again and let you guys figure it out. And our property management division is kind of like the glue that kind of holds it all together, right? So what I mean by that is, you know, we're gonna point you into a direction, maybe a good neighborhood, maybe an up and coming, you know, newer construction property or subdivision, that our property management team is comfortable managing, that we know this is a good area. You know, we get clients all the time that send us properties that, you know, it's in a crappy part of town, and, you know, we just don't feel comfortable managing that. We'll actually set the expectations with you up front, saying, you know, Mrs. Smith, I just don't think this is a good property. If you want to buy this, just know up front, we don't want to manage this, because we know that you're going to have a headache tenant, and then you're going to be mad at us, and we just don't want to set that we want to set the expectations up to you up front. So you know, when Jerry and Greg are sending you properties, you guys can rest assured that we're going to take it on, and, you know, it's gonna be in good hands.
Absolutely.
All right, so I know Jerry kind of chatted about this in the graphs about our property rating ebook. And for those that are unfamiliar with this, you know, after many decades in the business of finding quality real estate for clients, Marshall Reddick has established a classification system to help investors pinpoint strong investment properties. Using the Reddick Property Rating book, investors can categorize a property in one of the 5 classes that was discussed earlier. You know, using these classes, you can get, excuse me, you can get other property attributes such as, you know, when you're looking for a property versus an A class versus a D class. D class properties are going to be on the lower end of the spectrum, so they're going to require more upkeep. They're going to be probably less purchase price, and you know, you may cash flow a little bit more, but I will speak firsthand. I've owned properties in a C and D class neighborhoods, and sure, they look great on paper and cash flow is great, but you know, all it takes is the tenant to break something, and then there goes your whole cash flow. And you know, in the C and D class area, those properties hardly ever appreciate. So versus a class property, yeah, the purchase price is going to be a little bit higher, but more importantly, you're going to have a quality tenant that's going to take care of it, and you're going to see appreciation. So finding that right balance between the 2 property classes is kind of very important. I typically, my opinion, I kind of stay away from the C and D class properties just for those reasons. I kind of have a bad taste in my mouth, but you know, finding like an A class property, I will say this much: you're going to make more money in appreciation than you are in cash flow. Cash flow, in my opinion, is to really just kind of break even and you know, let the appreciation kind of take over. So what can you expect from an advisor? And my role here is really kind of to get a roadmap in place, right? So every investor has different goals. You know, they may be looking to achieve, you know, different goals with their portfolio, whether it's, you know, appreciation or certain amount of passive income. And I really kind of just tailor a specific roadmap for you guys, you know, as far as like goal settings, you know, evaluating your options, your time frame, setting your criteria, and kind of just put together a roadmap that is going to be beneficial for you, so that we can maybe tailor, get you guys on the right map and get you connected with a good lender, good insurance agent, and as well as, you know, these 2 rock stars on Jerry and Greg. So that's what you can expect with an advisor here. If you guys have any other questions with that, more than happy to set aside a, you know, one-on-one call. We can chat through what we spoke about on tonight's webinar to make sure you guys get a clear understanding. And with Marshall Reddick, we're on all the major platforms on social media. So feel free to check us out on Yelp. You can read tons. We have tons of reviews on there from, you know, just clients that bought with us over the years. We have raving fans that just keep buying and buying more. And, you know, we feel that's important, that when you're interviewing, you're basically interviewing us. And feel free to check us out on all of our social media platforms to kind of hear what other investors are raving about us. And that is it. If you guys have any other questions, again, my name is Evan. You guys can actually schedule a consultation. Just go to marshallreddick.com/consultation, and you'll be happy to set up a time with me if you guys have any other questions. And that's it. We appreciate you guys attending the webinar. Thank you so much.
Thanks a lot, everybody.